Hey, everybody, welcome back to Grain Markets and Other Stuff. We have a special guest today, a friend of mine, DuWayne Bosse from Bolt Marketing. DuWayne, what's going on today?
Well, big day, USDA report, right? And a lot of corn and soybean planting up my way. So I'll get done with markets and go sit in a tractor, what we all like to do.
Now, before we get started, we were talking about our respective little league seasons. We're just getting done, actually. Like our playoff game, we have a playoff game tonight as our first playoff game, and we actually started practice in like February, so we're wrapping up. Whereas you are just getting started.
Yeah, we'll start next Monday. Excited about that. And I think the same time there's a football camp, I think, for the little ones. So we might have about a half staff that Monday night. But yeah, it's been way too cold up here, Joe, for us to do any baseball. We still get down to like 30 degrees at night this week. It's been horrible.
Yeah, it's been cool here as well, relative to normal. I remember when we first moved down here, and I live outside of Nashville, Tennessee, if you guys don't know that. But when we first moved here, it was about this time of year. It was mid-May, and it was like 90 degrees out. And we haven't had anything like that here this year. I mean, it's been like highs in the 60s, 70s. We had a couple warmer days, but yeah, it's been kind of cool everywhere. All right, well, let's start off with this report here. I'm going to tell you the thing that caught my eye off the bat on the report. You tell me after that what you think caught your eye. I'm going to tell you the thing that stood out to me the most. The thing that stood out to me is that USDA is projecting that China will import the same amount of corn next year as they did this year, which is not something that I think a lot of people expected to see in this report. And then they're also projecting that China will import more soybeans in the new crop marketing year than they did this year. I found the soybean one is maybe not that surprising, but the corn one is surprising, and it's USDA kind of hinting to us like, hey, China's going to be back again next year. You know, that I thought was interesting.
Yeah, I got to agree with you there. That one caught my eye too, the corn thing for next year. Looked like to me like the old crop, what they expect China to take in for old crop imports of corn, maybe down a little bit from what we've been talking about in the trade, right? Mm-hmm. But still overall over the next 2 years, we're talking 50 million metric ton. And, months ago, there were some guys talking that high of a number, and here we are, we're actually there. It's very friendly for that corn market.
So as new crop balance sheets go, when we're talking about new crop, guys, we're talking about the time period from September 1st of this year all the way through August 31st of 2022. And it's for that reason that, in my opinion at least, a lot of these numbers have to kind of be taken with a grain of salt because there are so many things that can change. I mean, acres and yield and demand and currency fluctuations. I mean, it's like this is a starting point, but this is not gospel by any means.
No, you nailed that there, Joe. It's just a starting point is all it is for USDA. I mean, remember last year at this time, Joe? Well, the starting point was 3.3 billion for an ending stock of corn. That sure didn't happen.
Well, that's like your perfect example of why these new crop numbers in May or even into June just kind of need to be. I mean, you got to watch them. You want to know where to start with your balance sheets, I guess, and you've got to start somewhere. And USDA does not have an easy job here when it comes to this stuff by any means. I mean, throwing those numbers out there, they're educated guesses is what they are for the most part.
Right. Yeah, exactly. But I mean, they got to start somewhere. It doesn't bother me at all. It's fun to play around with them. But here's the thing is you could nail these reports and get the supply and demand table right and still not trade the market right. So it is just a game, really.
Were you the corn market did not close real well today. D's corn was down 18 and a quarter cents on the close, back below $6. Are you discouraged by that, or is this run of the mill volatility?
One day you got to call it just normal volatility, I'd say. But I will admit, it did kind of go into this week with the idea of, if this report isn't friendly and the weather forecast changed to a little bit negative, maybe more rain in the forecast, if they don't knock the Brazil crop down as much as the trade wants, we could put in a temporary high in that D's corn market. Now, really hard to call the high for the year because that depends so much on weather and other outside market influences. If beans are going to take off and rally another $4, corn's not going to go lower. So, but not a great trade today. I guess, tomorrow and Friday, we're going to have to see how the funds want to treat this market. I don't think they're ready to exit anything yet. There's a lot of weather in front of us, but I'd be a little nervous if you're a producer and realize if you haven't hedged anything yet, that's a very good price to hedge.
Do you see anything in the report today, necessarily today, that necessitates like corn having to be down 20 cents? Is like we were down before the report, and then the selling accelerated a little bit after the report, but it didn't look to me like an end of the world type trade today. I mean, it was definitely a risk off day in the corn market, but not a disaster. And then the beans were up.
Right. And like you said, both those, corn was down and beans were up before the report. I think one of the biggest reports of the day was actually maybe the CONAB report that came out early this morning. They reduced their Brazilian corn crop size down to 106.4 million metric ton. That caught the trade by surprise right away this morning because, of course, USDA did drop it to what did they do, a 1.3 or 103. So, yeah. So, of course, CONAB is Brazil's form of USDA, right? So they didn't drop the corn crop down there as much as we thought. So I think that took a little bit of wind out of the bull sail this morning.
Yeah, I don't know how the trade's going to handle that, because I have felt for a little while that that we had been trading a Brazil crop like south of 100, like mid 90s, maybe up to 100. So I don't know if the trade believes that Brazil number, or if they believe that this is just one decline of many declines to come. And the same could be said for the USDA number, which is maybe closer to reality in my opinion. But then again, I'm not in Brazil. I'm not an agronomist in Brazil.
I know.
But there are people on the ground there that say that it's every bit as bad as 95. So this is an interesting kind of conundrum that we have here, in that you've got the Brazilian government telling us one thing, but a lot of the private groups telling us different things.
I think it's important to point out too, when crop sizes start to become a disaster and start decreasing that way, sometimes it's a race to see which analysts can get the low ball number, right?
Yeah, we've seen a lot of that.
Yeah, we've seen
over
some
the years.
85, 80, and I think that is too far. I think you're hitting it right around that 95. But like you said, I'm not in Brazil. I couldn't tell you where the crop size is. Another thing that did catch my eye, this is a little bit off topic, Joe, sorry, but looking at next year's S&D tables, the 22 for world stocks. Now we're talking way the heck out there, but Brazil at a soybean crop of 144 million metric ton, that's a big crop. But I guess it does kind of make me think, well, high prices do that, I guess. They're going to farm every inch down there, I guess.
Well, this year's Brazil crop at 135 or 136. I mean, that's the biggest soybean crop that any country has ever produced. And now now we're going to add another 10 million metric tons to that or whatever. It's pretty phenomenal, but they've got more rainforest to tear down, I guess, and they're going to keep knocking it out of the park. So the reason that we wanted to have this conversation today was actually not because of the report. We wanted to talk about acreage and some of the things that you're seeing up in your neighborhood in regard to potential acreage changes versus these March intentions. And guys, just so we're clear here, USDA in their new crop balance sheet today used that March acreage number for corn, 91.1, and they used the March acreage number for soybeans, which is 87.6. DuWayne, you're in South Dakota, and I'm hearing a lot of talk about more corn acreage versus intentions out west, Iowa, the Dakotas, Nebraska in particular. Is that something you see happening? And if so, what is happening and why?
Yeah, it started maybe a couple of weeks ago, hearing some rumblings about prevent plant coming back into production, a lot of corn seed going out the door, and it just really accelerated from there, Joe. Now I'm talking to seed dealers in North and South Dakota both, and they're saying record corn seed sales for them. So they're trying to get them on the phone, and they're busy all day long. That's how much seed's going out. And because of the drought, we're going at a very fast pace too. But to back up, it's the prevent plant thing that's really friendly. Last year, North Dakota had 2.99 million prevent plant acres. South Dakota had 1.6. The nation had 10.2 million prevent plant acres. Well, you've looked at the drought monitor and broadcast that to your listeners on Thursdays. If you're in a drought like that, you're not going to have prevent plant acres. So I think not only are corn acres up in the Dakotas, I think we're going to be up in the nation quite a bit from those March intentions you mentioned earlier.
So I don't know what people are. I've heard a lot of numbers thrown around in regard to corn acreage. I mean, I think that the minute that March report was printed, everybody immediately assumed that the corn number was too low and that probably the soybean number was too low also. But I mean, so 91.1's what's in the balance sheets. Are you thinking 93? Are you thinking 95? Are you thinking higher than that? And I know this is a very difficult question. I hate to put you on the spot, but I mean, what do you think is achievable here?
No, I honestly, I'm putting in 97 million in my spreadsheet right now. I know, it's crazy high, and everyone likes to look at past USDA and how much they changed from March to June, and there's never been a 6 million acre increase. But here's my points to that, Joe, is, one, listen to what I've heard from the seed dealers lately in the Western Corn Belt, North Dakota, South Dakota, and I've heard that in Nebraska as well. But like I said, those principal crop acres on March 31st were at 316 million. Back in 2014, we had 326 million principal crop acres. If you're ever going to gain all those acres back, it would be when you have really high prices in a really dry condition. I just think there's a lot more acres out there for both corn and soybeans, but in my spreadsheet right now, I'm putting them all in corn and soybeans staying the same. I'm not going to jack up soybean acres 3 million and corn 6. That's even crazier than I just sounded.
It doesn't sound crazy. I mean, first off, the corn market up until these last couple of days has really been doing the work in that, new crop corn versus soybeans spread. I mean, the corn looks better probably from a profitability standpoint, I would imagine. The dry weather results in quick planting, which is typically more corn acreage. There's a lot of things that would entice a farmer to go and plant as much corn as he can early, especially in these western areas. Now out east, it's a little bit different. There are parts of, say, like Indiana and Ohio and places out there, even down where I'm at, like Kentucky, Tennessee, where it's been really wet. That could be a different deal. But, in your neighborhood, central western corn belt, I mean, there doesn't seem to be anything stopping more corn acreage versus March, I don't think.
No, I had another broker in our office yesterday tell it to me this way. All these prevent plant acres, like I said, so there was 10 million of them last year. Let's just say the majority were in North and South Dakota. He said they're like free agents right now. Mm-hmm. They can go to wherever the money is. And in the Dakotas, I can make a lot more money on my farm with these current price ratios planting corn versus beans. In fact, on our farm, we just upped our corn acreage. Of course, we weren't smart enough to sell it right away, but we did because it's just more profitable, and we will push to sell it more. So, yeah, those acres can be bought. They're out there. Gosh, I don't know where else to go with it. It'll be very interesting. Here's the scary thing is, so we talked about USDA and their S&D tables for new crop, right? And it's just a poster. It's something on the wall to look at. But that 1.5 they printed today, add in my 97 million acres, Joe, and a trend line yield, which is a lot of weather, but all of a sudden it's not a bullish ending stock. And the ending stock I've got is a 2.1. And I know that sounds stupid crazy, but producers should just know that possibility is out there. So we should be managing risk and protecting a very, very profitable price.
Price rallies, even during planting season, can encourage additional acreage like last minute. I think we saw that in 2019, as a matter of fact, when we had like a disaster of an early growing season, but then the prices really spiked in May and June. I think that, we lost a bunch of acres because of prevent plant, but I think that you gained some acres because of the high prices. And now you've got no real weather obstacle to speak of, and you've got the high prices where every farmer in the country is able to profit phenomenally on the farm. So this is, I don't think the 97 number's crazy. What would be crazy to me is if we don't find these missing principal crop acres this year with these prices and this weather. That's what would be crazy. And I don't know if there's a great answer to that question. Like, where were the acres in the March report? Are they coming back? I mean, that's the big question mark for me, I guess.
Great points there, Joe. That would be the biggest crazy thing, is if we didn't find these acres. I wonder if back on March 31st, if USDA didn't look at the acres and say, gosh, we always underestimate prevent plant. Mm-hmm. And for the first time ever, maybe they just factored in a little bit more prevent plant. And sadly, that happened in a year where we probably will have a record low prevent plant. Usually the lowest before, I think, has been 1.5 million. I'm wondering if we even get 1 million acres of prevent plant. And it'll probably be in the Delta. It's not going to be in the Dakotas, I can tell you that much. The other fun thing, I keep rambling on you, Joe, but you mentioned, a price rally usually can gain some acres, and they did in 2019, especially in my area. I'm very close to North Dakota. Only 3 miles away is where my office is from North Dakota. You get this far north, we're just late planting, right? Soybean market can rally the last week in May, first week in June before our prevent plant deadline of June 10th comes up, and that'll buy acres. If the soybean market rallies enough, on my farm, I'll say, you know what, let's go try and mud that last quarter in, even though the conditions aren't best because they're $14 beans. This year, though, with the early plant place in the Dakotas, we're planting corn and liking corn so much, soybeans are running out of time to rally and buy any acres is what the point I'm trying to get across here.
Yeah, it kind of feels like the bean market is making like a last-ditch effort here to buy acres. Yep. I mean, when you look at that USDA balance sheet for beans for next year, 140 million carry out, 4.42 in use. I mean, that's still a stocks to use ratio of like 3.1, right? Which is super tight. I mean, it's barely better than this year. It would be like the second or third tightest ever on record for the United States if these numbers are real. And I think the bean acreage number goes up, but this rally here in beans and new crop beans in particular these last couple of days kind of make me feel like the bean market's thinking like, wait a minute, corn just like really did some work here and the weather's cooperating, and now the beans we're going to try to get some of these acres back, either back from corn or just back in general. Yep. Because that bean balance sheet, I mean, based on today's new crop numbers, which are all smoke and mirrors as far as I'm concerned, but I mean, the beans need the acres more than the corn does.
Exactly. And it's running out of time to buy those acres. Just got off the phone with a client in northern Minnesota, east of Grand Forks, North Dakota. So that's up a ways, trying to plant more corn, and he cannot find the corn seed. So that'll tell you two things. There's plenty of corn being planted up there, and he's still trying to plant corn, even at these prices.
Yeah, this is going to be an interesting deal. That June report has the potential to have some real fireworks in it. USDA, of course, gives us the planted acreage numbers at the end of June, and that's really one of the biggest ones of the year. I mean, there could be some big-time surprises in that deal.
Yeah, exactly. And then the stocks report right with it. I mean, old crop has its own story now, but maybe now after today, these actually separate even more. You got an old crop tight basis situation, a new crop situation that's maybe not as bullish as we once thought for corn. But I got a question for you, Joe.
Yes.
That soybean ending stock number of 140 million bushels, that's crazy tight. Here's the thing is, with everything you just mentioned, do we even have a weather premium built into a 1440 November board with that tight of an ending stock?
That's a really good question. I mean, these markets have thrown a lot of people for a loop here these last several months, myself included. I mean, nobody last spring, summer, fall could have anticipated this sort of price action. I don't know what's built in. I really don't, because some of the stuff makes sense to me. Like the fact that old crop beans are super expensive makes sense to me because I see the stocks to use ratio. I see what's out there. The new crop bean number, I guess I get it. New crop corn is maybe more of a head scratcher if these numbers are anywhere close to reality, especially if you're to add in 3 million acres or so. But I mean, the bean stuff is in the United States. I mean, make no mistake about it. This year, this 2021 marketing year is essentially as tight as it's ever been.
Yeah, there's no margin for error. And I've been beating my fist on the desk here all winter long saying we need to ration demand. We need to import beans from Brazil. I heard that this morning too. There talk that this 35 million bushels we're supposedly importing from Brazil isn't going to happen because we haven't done that job yet to ration demand. So I think July beans are trying to play catch up to do that right now.
Yeah, and the other thing is that the farmer is just not sitting on the bushels that he is in a typical year. In regard to old crop especially, you just don't have that natural seller to step in front of these rallies the way that we've had, every year since 2014 up until, this past year. It's a little bit different ball game. I don't know who's buying this stuff anymore because the funds haven't really been big buyers the last 3 or 4 weeks, and the commercials are still super heavy short. I don't know. Is it the Reddit traders buying it? I have no idea.
I don't know either. You bring up a great point there too. That makes me nervous that the funds are long but haven't bought like into the corn market since really almost September. And I know I got to give you credit, Joe, a long ways back. You said, when the funds are long, that usually raises a red flag that, hey, maybe I should be selling as a producer or managing risk at least. And that causes concern here too. Now, I don't think we've done anything today by no means to make the funds feel uncomfortable being long this market. But you start getting some normal weather in the U.S. If you don't have a drought scare, then funds don't do flat. They'll start going the other way.
Yeah, and they typically do. I mean, I don't know if you can find a year where they stayed on one side of the market the entire year. I remember asking people, and I did like a Twitter poll last spring, and when the funds were like record short corn, I said, "Will the funds ever go long ever go long corn in 2020?" And more than half the people said no way. And then of course they went huge long by the end of the year and maintained that big long. That's the interesting thing, is that they've been long for such an extended period of time now, which is not it. I haven't gone and done the math, but this has got to be like close to a record period of time that they've held a long position in the market. Maybe if you go back to like 12 or 13, or maybe that 10-11 time frame. But interesting stuff.
Interesting fun fact, in 2012, when we had this big corn rally too, right? The last $1.50, it sounds like the funds were not active buyers then either. Sounds a lot like we've just had the last $1.50, doesn't it?
Don't scare us now. Come on. That's probably a good place to wrap it up. DuWayne, I appreciate you joining me today. We will do this again sometime, my friend.
Yeah, hey, good luck tonight with baseball.
Yep, we're gonna rock and roll. Our team is actually terrible. We've only won 2 games and we've played like 10 or 13. But I'm proud of the kids. They've made huge improvements. It's cool. It's fun to do.
It's a lot of fun. Good luck and thanks, Joe.
All right, man. Have a good one.